Good morning to all. So in the previous lecture, we have tried to introduce about the concept of leverage, where we landed to the conclusion that leverage is basically a technique which helps in the construction of the optimum capital structure. When the company is trying to decide that what should be the optimum capital structure, that means decision with respect to the mix of the various sources of finance, then leverage helps us in understanding that what is the relationship between the various variables. It means if the sale is going to increase or decrease, what will be the impact on the earning? If the earning is going to increase or decrease, what will be the impact on the earning per share? And in that discussion, we said that leverage will be of three types. We can say as operating leverage, financial leverage, and combined leverage. With respect to these three, we said operating is going to measure the relationship between sales and EBIT. Sales and EBIT relationship will be measured with the help of operating leverage. The name has been given as operating because it is related to the operational cost of the company. And when we say operational cost, it includes the fixed cost and the variable cost. Financial leverage, when we try to draw the relationship between EBIT and EPS. And the combination of both operating and financial leverage will be known as a combined leverage. That means the product of OL and FL will be set as a combined leverage. That means overall leverage of the company itself. That means the impact of sales, the change in sales, the impact on the earning per share. In today's lecture, we will discuss about operating leverage. In short form, we name as OL, operating leverage. Basically, what operating means? Operating, here we are trying to consider the operational cost. And when we talk about the operational cost structure, then we divide the cost structure into three parts. We say as fixed cost. That means all the assets which are being engaged in the company, which will be considered for the operation. And here earlier also we discussed that fixed costs include like the salaries, rent, depreciation. These can be the various fixed costs which can be associated to company. The other cost is the variable cost, which is going to vary with the change in the sale volume. And the third is the semi-variable, or we can say as the semi-fixed cost. Semi-variable or semi-fixed cost means the cost will remain as fixed to certain volume of sale, and beyond that the cost is going to change. मतलब हम कहें कि 100 यूनिट तक हमारी फिक्स कॉस्ट इतनी रहेगी और जैसे ही हमारे यूनिट्स 100 से बढ़ते हैं there will be this much proportionate increase in the cost itself. Means in nutshell we can say third portion we are saying. The third portion or the third cost is semi-variable and semi-cost or semi-fixed. Means these two can be further rest into fixed and variable. So ultimately we can say there are only two costs only. Fixed cost and variable cost. And semi-variable and semi-fixed will be considered under fixed and variable itself. And we said earlier also that what OL is doing. OL is trying to measure the impact on the earning the impact on EBIT with the change in sale. That if we are trying to, if the sale is going to increase or decrease, what will be the level of change in the EBIT? And yesterday itself we have framed out that percentage change in EBIT upon percentage change in sales. That means dependent upon independent variable we have seen. Now we take up a small example. Suppose we try to discuss the operating leverage with the help of an example. And here we consider, suppose a company has sales. A company has sale of 1,000 units. And for getting this sale, the company is having variable cost as rupees 7 per unit. No other cost is there. That means the total cost of production is 7. That means we can say that fixed cost is 0. Suppose we consider fixed cost as 0. And if the company increases the sale by 40%. What I am trying to say, the currently company is operating as a sale of 1,000 units and the rate is rupees 10 per unit. The rate is given as 1,000 units and rate is 10 per unit. The cost of production where only variable cost is there, no fixed cost is there, variable cost is rupees 7 per unit. And in near future, suppose we can say in the next year, the company expect to change or increase the sale by 40%. Then we are trying to find out that what will be the operating leverage. That means that we are trying to find out that what is the change in sales and what is the change in the EBIT. Now, two things we can take. We are having 1,000 units and 40% increase. That means 1,400 units because it has increased to 40%. Means we can say increase of 40%. Right? Now sale. What is the amount of sale? At the rate of 10 rupees, it will be 10,000. It will be 14,000. Minus variable cost, which is given as rupees 7 per unit. It will be 7,000 and this will be something as 9,800. 1,400 multiplied by rupees 7. 3,000 will be the contribution. And here it will be 4,200 as contribution. We deduct fixed cost. There is no fixed cost. 0. Fixed cost is 0. That means 3,000 and 4,200. And this is your earning before interest and taxes. From 3,000, earning increased to 4,200. That means, what is the percentage increase? See, one thing, those who are not aware, P1 minus P0 upon P0. P1 is the current 4,200 minus P0 earlier, previous 3,000 divided by 3,000 multiplied by 100, you will get as 40% only. This minus this, divide by this, multiply by 100, you will get the percentage change. Right? So we can say that here we are having 40%. Means simply, if we put the equation of operating leverage, percentage change in EBIT is 40%. Percentage change in sales, 40%. That means 1 time. This means whenever in cost structure, the fixed cost will be 0, operating leverage will always be 1. That means 1 rupee increase in sale will last to 1 rupee increase in EBIT. That means direct proportion is there, that as because fixed cost is not playing any role, variable is being playing the role. जैसे जैसे वेरिएबल कॉस्ट बढ़ती जाएगी, सेल हमारी बढ़ती जाएगी, हमारा EBIT भी बढ़ता जाएगा. Another case we take up. Suppose in this itself, suppose now I take fixed cost. Now I take fixed cost as rupees 1000. I take fixed cost means now along with the variable cost, the company is also having the fixed cost. Other things remain the same. 1000 and 1000. It will come to as 2000. It will come to as 3200. Again, you calculate the operating leverage. Percentage change from 2000 to 3200. That means approximately 60%. 60% increase is there. That means 60% upon 40%. That will be the same. It will be 1.5 times. As we have included fixed cost in the cost structure, the change in the EBIT is more than proportionate with the change in the sale. That means whenever fixed cost will be engaged in the cost structure, then the earnings before interest and taxes will be more than proportionate than the percentage change in the sale. And here you can say earlier the fixed cost was 0 and here the fixed cost is 1000. That means the operating leverage has increased from 1 to 1.5. If the sale increased by 1, then earning is going to increase by 1.5 itself. Right? That means what the importance is? The importance is the fixed cost is playing the main role. If you increase the fixed cost more, fixed cost means involvement of fixed assets. Earlier, we were not having the building. We were working on the rental basis. Now we are having the building. As we have created some fixed assets, now the operation will be done. Automatically our earning is going to increase after certain time when we have recovered our fixed cost. Because after the operation of certain period, the fixed cost is being recovered. Operating leverage is helping us in knowing the ability of the company to cover the fixed cost. Fixed cost means ability. The profitability of the company is going to come only if the company is going to recover the fixed and the variable cost. Then only the earning will be shown. That means the major role is being played by fixed cost here. Variable will increase with the amount of sale, it will vary itself. That means the role that is being played here is by contribution and the EBIT. This 1 or 1.5 times, technically it is also called as degree of operating leverage. Degree. 1 times or 1.5 times is the degree of operating leverage. And degree we write as contribution upon EBIT. Contribution upon EBIT. Variable cost is not concerned because it is not playing an important role. If the fixed cost is there, then operating leverage will be there. If fixed cost is not there, operating leverage will always be less than 1. One more thing, established thing. Whenever fixed cost will be 0, operating leverage will always be 1. And whenever the fixed cost will be engaged, operating leverage will be always greater than 1. जैसे ही फिक्स कॉस्ट लेकर हम लोग आएंगे, ऑपरेटिंग लीवरेज हमारा 1 से बढ़ जाएगा. Now when we talk about the degree, you see, contribution is in this case, contribution is 3,000 and EBIT is 2,000. 1.5, the same thing, 1.5. Operating was 1.5 and degree is 1.5. Other case, 4,200 as the contribution and EBIT is 3,200. How much? Less than 1.5. It must be approximately 1.31 something. That means, if the fixed cost is constant, sale has increased, automatically the degree of operation is also going to decrease. That means, if operating leverage is higher, or we can say, if the DOL is higher, it will show the risk on the business also. DOL 1.5 है तो हमको ये दिखा रहा है कि हमारा 1.5 गुना EBIT बढ़ेगा. But along with, if the sale decreases, then what happens? Because in good times the sale has increased to 40%. If the sale decreased to 40%, the fixed cost will remain as fixed and automatically there will be losses to the company. EBIT will come to as 0. That means operating leverage will always be greater than the break-even point that is beneficial for the company. Break-even is 1.5 more than the break-even. So a slight increase in the EBIT, then the break-even point, it is always the beneficial for the company. So here we can say the degree that we are having, as we go on increasing the sale is 40%, degree is 1.3. Sale is 60%, degree is 1.2. Means from 1.2 it will be sliding down because the fixed cost is constant. Yesterday the problem that we have taken, that where the sale proportion increased from 5,000 to 6,000 and sale unit increased from 200 to 300. What happened? That proportion increased to 20%. खर्चा बढ़ रहा 20% का और सेल बढ़ रही है 50% की, तो खर्चा कम, सेल ज्यादा, automatically the proportion will be more than 1. Here also, if the fixed cost remain constant and sale is being increased, automatically the earning before tax EBIT is also going to increase. So operating leverage, what the consensus that we draw, that operating leverage help us in knowing the relationship between the variables. Operating leverage help us in knowing the risk associated to the company. A slight change in the sale is going to benefit the company if the sale has increased, but a slight decrease in sale is going to bring the companies in losses. So it is always advisable that our sales should always be a sufficient increase than the break-even point. Then always, if there is a slight impact in the decrease on sale, then no losses will be faced by the company. मतलब अगर हमारा break-even point 1 से ज़्यादा रहेगा, तो हल्की फुल्की सेल की डिक्रीज करने में भी हमको दिक्कत नहीं आएगी. And if the sale is 1 only, a slight decrease in the sale itself can bring losses to the company. Like in this example, I have taken 500 units, 1,000 units and 1,400 units. You can take the example of 500 units also, and easily you can work out that what you have got. There will be decrease in the EBIT itself. and knowing the risk situation, operating leverage also can be considered as a business risk. कि DOL हमारा बढ़ रहा है, degree of operating leverage is increasing, that means beneficial for the company. But think the point when the sale is going to decrease, then the company can face the losses. So we are supposed to increase the fixed cost. In that respect, we are able to recover it. मतलब इतना फिक्स कॉस्ट मत बढ़ा दीजिए कि भविष्य में आप उसको रिकवर न कर पाए. Then the losses will be faced by the company. Right?